Manel, welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights, help boost your trading potential. Coming up, the U.S. 10-year Treasury yield. Been an interesting move, hasn't it? We've been seeing selling pressure in U.S. bonds driving yields higher. Eased up a little bit on Monday, but a lot of uncertainty out there still. We're going to break it all down in today's technical take. Plus, it's a big week for Q1 earnings. Streaming giant Netflix set to report later this week. We've got the bull versus bear debate. Trader debaters are standing by, not only with the debate, but with option strategies for those different sides. That's all ahead. You're watching TD Active Trader Live. We're half an hour into the trading day. Got some green on the screen on Wall Street, building off of 2 days of gains. Yes, we have a lot of concerns about tariff policy, ever-shifting tariff policy, but we're also in the thick of earnings season. The big Wall Street banks leading the way. Gonna have details of a few more of them for you in a couple minutes time. But, you know, we got the trade war between China and the U.S., more tit-for-tat measures, but also some impressive earnings from the bank. So let's dig into the heat map. Want to see what's putting us modestly in positive territory so far in the session. We can see the tech stocks are green, but it's pretty modest. I really want to focus in on the financials right now because we keep getting bank after bank saying all this market volatility is actually not bad for the trading desk, and that's helping power beats on the bottom line. The latest we heard from Bank of America this morning. So let's take a look at what's happening here. We got the stock up about 4% on the back of its Q1 beat. They came out with a stronger than expected trading revenue. Also, net interest income was stronger than expected. Citigroup also out today, a similar story, a beat on that robust trading desk activity. You might be getting nervous about what's happening in the markets, lots of volatility, but in the end, that means transaction flow. It's usually good for those trading desks at the big banks. I want to check in on Boeing, though. This is a report right now, unconfirmed, but we are getting reaction in the name. A bit of downward pressure. This is the tit-for-tat measures I've been talking about in the trade war between the U.S. and China. Reports out there that Beijing ordering Chinese airlines to stop taking deliveries of Boeing planes, also ordering them to stop buying aircraft equipment from U.S. suppliers. So, interesting developments there. We'll see how it all pans out. But so far, it doesn't seem like either side, Beijing or Washington, wants to back down. And that's your market update. Interesting days on the markets. Lots happening. Joining us now for a technical take on what is happening out there is here in Amin, Jason Nadek from our Direct Investing Education team. Thanks for being here, gentlemen. Another great program ahead of us. We're all in the seats, despite some drama getting you guys into the big city, and you're going to break
just a little
drama.
Yeah.
You know what? It's not fun without the drama, right?
Exactly.
It's airtime now. We're all here. 10-year U.S. bond yield. What an interesting run.
Oh, yeah. It's not playing according to script here. So the 10 years, quite a bit of movement we saw happen last week there. Just for everyone's knowledge purposes, the 10-year yield I've got it pulled up on the chart right now. Symbol is TNX on Active Trader. So this is a tracking. It tracks the 10-year U.S. Treasury note, in fact, and so this is the representative of the yield. And usually when you see sort of this uncertainty in the market, you expect bonds to get a bid up, and that means when bonds, they have an inverse relationship, so bond prices go up, you would expect yields to come down. And they did right up until the tariffs went into place. So we saw the yield get down on this candle, down to that 3.8 level. And then once the tariffs went in place, we see this significant big bullish candle that really just pushed it above the 4% level. 400 basis points, kept surging right up to about 4.5. So we saw a 50 basis points move happen, Greg. This also happened on the 30-year yield as well. Similarly, 50 basis points move. This is the biggest basis point move that we've seen, probably in the 2-day increase on record is what we saw with that sizing. Now, what's the bigger narrative? What's happening here with the bond? Because when you have risk-off environments, you see flight to safety with going into bonds and the US dollar, but we saw a sell-off happening. There was meaningfully, and this is like the big institutions that would be selling it. So, there's speculation around this. The administration was probably trying to bring the yields down. They also have to take care of a debt that might be renewing soon. They have a certain amount that they have to refinance. But the exact opposite happened, and the speculation that countries were engineering this maybe as a way to get to the negotiating table with the table, just for the U.S.
presenting their own leverage.
Presenting their own leverage,
yeah.
Exactly. And China and Japan are the biggest debt holders of U.S. paper. Japan number one, of course. I just read that life cos in Japan, which are the biggest life insurance companies, they were just not, with uncertainty, of course, they wanted to protect themselves. So maybe selling there. And then, of course, we know with China, the relationship and how that's sour to a point where they don't have as much to gain by restricting imports, U.S. imports. So this is maybe a way that they're doing it. So this is a good one to keep an eye on. It's resting very firmly on this bearish trend here. We saw it punch through here. We'll see if there's further, upside momentum, and that would indicate there's further weakening. Again, it's a flipping and flopping of the tariff situation. So that we'll see how the bonds play out there.
Obviously, 10-year yields. We take a look at U.S. Treasuries. You said as in times of turmoil, people move to them unless they don't, and they didn't last week for the various reasons you outlined. Also, the U.S. dollar. I mean, this is the world's reserve currency. It's considered a safe haven. What has the chart been telling you about the movements here? Yeah,
let's look at the USD. So dollar sign DXY is what we've got in active trader, and we're looking up here, and we've seen a significant sell-off in the greenback over here. So you could see just at the start of the year, it was touching 110. This is, again, it's a measure of the basket of currencies against 6 major currency pairs across the globe. And now we're at a point where it hits a key support level. In fact, it's trading below that key support level, which is at 100, which is pretty much on par with all those currencies there. It hasn't reached this level since early back in 2024 in September or so, we touched it, but we've meaningfully come down at the moment. Now, when you think about this, as you mentioned, a weaker US dollar is, in a way, is a boon for US equities, because if you have multinational companies that do trade, it also means that there's more revenues coming up from those foreign currencies. But we've seen it plunge almost 8% year to date. And this makes it the worst start of the year for the greenback since 1995 there. And again, as you mentioned, Greg, this is a safe haven asset. Investors, typically big money, will flock to bonds and the greenback and gold. And again, you're seeing a sell-off over here. So what the bigger narrative theme I think we have to understand by all of this is maybe there's sort of a destruction in the U.S. brand that's taking place, and there's a capital strike that's unfolding here that we might seeing where there's just a sell-off. So again, we'll keep a close eye on this, see if that does fall. It's fallen to the lowest level at 89, so that's going decades back. So we'll see if it's kind of holds this resistance now for the foreseeable few weeks going forward.
Two big ones with big macro themes. You're also looking at JB Hunt Transport Services. Why are we talking about this one, and what's the chart telling you?
Yeah, so I've got JB Hunt pulled up over here. They've been beleaguered, of course, a little bit. They've been in this bearish downward channel, almost hitting the 2020 resistance level, which was resistance, is now support at that 120 level. Now, why are we looking at this company? So this is a surface transportation company, one of the largest by revenue when you think about them, and they really integrate the whole logistics chain. When you think of moving products from A to B, they're the behind-the-scenes muscle, essentially. And so with their earnings, in fact, coming out later today, it'll be interesting to see. Their estimates are $1.15 per share on $2.9 billion in revenue. But what will be interesting is the guidance on how they see this tariff situation playing out. There's also the narrative happening where just before the tariffs have been, flip-flopping, a lot of companies have been front-loading. That means they've been shoring in inventory big time. Jay will get to a bit of that, but that means that JB Hunt may be in the mix of having to move that inventory into warehouses to supply them. So it'll see what they see for the next quarter and if that's still shaking through on the front there. So we'll be keeping out on them and seeing what their guidance is going to be going forward.
Pretty interesting plays. If we're talking about tariffs, Jay, I can't think of a better U.S. company to sort of illustrate the sensitivities to overseas manufacturing. You got Apple.
Yeah, we got Apple, and thanks for passing me the front-loading baton. This was a term that was relatively new to me, but it's a term where you've got companies that are bringing in assets or bringing in product inventory from overseas markets just ahead of tariffs. And kind of this is highlighted where China actually saw in the month of March saw a 12.4 increase year over year in terms of the exports to the United States. When that's a huge increase when there was only expected to be around 4.5%. But focusing in on Apple, there was a much publicized flight out of India ahead of the 26% tariffs on that country, where 1.5 million units or 600 tons of iPhones were shipped back into the United States ahead of the tariffs, so they could maybe stave off some of those pricing increases that might have been in place because of tariffs, because they have a huge Foxconn production facility in the country. But looking at the chart, we can see that there's been a huge sell-off like many of the other companies, but there's this, recently we've got certainly a big good news story that's been told. Big gap down on so-called Liberation Day, but the company has really started rebounding off of those big declines, and we're at a point now. If we can continue to fill in those gaps, the chart is looking open for the stock to kind of retrace some of its highs it had early in the year, and this is even coming off hot at the presses today. We saw an analyst increase pricing targets. This is from Evercore, up from 250 up to 275s. And the last thing to mention here, just about manufacturing, it's not as easy as just shifting and dropping a plant from over in India or wherever it might be located.
Can't open one overnight, right?
Right, you can't do it overnight. We heard this from the auto sectors. This isn't just about opening factories. It's talking about skilled labor. These are people that are professionals in the industry, and cost increase from a tariff or from a product perspective would go from anywhere from a current $1,000 to somewhere around $3,000, if that's what estimates are saying, if production was moved domestically into the United States for iPhones.
Very tender moment with my iPhone the other day. I'm like, are you the last iPhone I'm ever owned, buddy? Are you the last one? I try to squeeze one more in there. All right, thanks for that, guys. If you at home have a question for our team, here's how you can get in touch with us. Email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. You get more information there about all the trading platforms under that Get Started tab, so you can find the one that is best suited for you. And if you're interested in trying out the TD Active Trader platform risk-free, you can open a practice account by clicking here on the Try TD Active Trader button. Whether you're a seasoned or a new investor, TD Direct Investing has you covered and has once again, for the third year in a row, been ranked as the #1 online brokerage in Canada by the Globe and Mail. It's time now for Trading Debating, the guts of the show, the heart of the show. This week, the stock in the spotlight is Netflix. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. All right, let's get back to the stock of the hour. Netflix, what made you guys pick this one to debate? Hearing.
Before the streaming wars even started, Netflix was pretty much transforming the entertainment industry. You remember back in the day when you used to walk into a Blockbuster, and that was kind of a ritual. But you also got
just picking a movie.
Exactly. You also got hit with those late fees, right?
The rewind fees.
So
we're dating ourselves here.
So they kind of disrupted the market space as a whole. So it was good to see just what was the advent of the streaming wars, and they're coming up with earnings. So we'll take a closer peek at them.
Netflix.
Yeah, come a long way. I can remember taking some of their DVDs and dropping them in the return box.
Because that's how it began, right?
Yeah,
DVDs coming out of a machine.
It's a physical asset in your hand. Yeah, obviously exciting company, lots going on. So interesting one to debate.
All right, let's get some time on the clock. As always, you get 2.5 minutes each to make your case, the bear and the bull. Some time to counter. After that, you draw from a hat every week to figure out who's going to be the bull, who's going to be the bear. The bear. And Hearing, you got the bull case. Why don't you kick things off for us? The bull.
Absolutely, the bull will go. All right. So as I mentioned, Netflix business model has really disrupted the traditional sort of movie rental model. Or even just the way we consume entertainment. They pioneered essentially direct-to-consumer streaming. They've recently taken several initiatives or strategic initiatives to diversify not only their content slate that they have, but something that's also going to position them well in this in the entertainment industry. So I'm going to start first with just talking about the content for a moment, because they're far above any competition when it comes to that. They have committed to capex spend of about $18 billion this year alone on movies, TVs, and other production. They have their own in-house production house as well, and they're curating content for local viewerships and local markets as well, which is interesting. So we know some of the notable shows that have created like sort of cult followings. Squid Games, we know, second season, that was their most watched Netflix series in 2024. Stranger Things, that's another cult-like following that you have. And of course, this year, the biggest one that they released in this Q1 was Adolescence. They amassed 66.3 million views in just the first 2 weeks. And I know we've spoken about it, but rave reviews across the board from the like. They've also gone into gaming capabilities, which is tremendous. Their Squid Game Unleashed became the #1 free app on App Store in 107 countries. And then live sporting events. That's a big thing. The Jake Paul Mike Tyson boxing match, that was the most streamed sporting event ever. 108 million views came in on that one. And then, of course, they did the NFL Christmas Day special, and then they have the WWE.
Yeah, less than a minute.
And then JP Morgan has dubbed them the most resilient company, with an average engagement and watch time from its viewers of 2 hours per day. Let's go into the chart, and I'll save my rest of my points for our debate. So the charts are very interesting. So what you see on the charts, I wanted to map out both on the higher time frame where the trends are. You can see on the bottom I have this monthly bullish trend. Way above it on the weekly trend. It did the bounce just off of those, just when the tariff news broke. But it's swiftly, you've seen these strong bullish candles pushing it above. We saw this big downward trend on the daily, and it's now pushed above it as of today. It's punching above and sitting at the 990 level. So looking at this action, and if I were to just bring up my RSI and MACD studies here real quick, and we can see even on the EMAs, it is firmly in a bullish trend. The moving averages are also confirming that move. We see a resistance at 1,000, but if it pushes above that, it's going to hit new highs.
All right, there is the bull, Jay. He laid out a bunch of shows that we've all watched, brought a real populist kind of feel to it. What does the bear have to say about it?
All right, so even if Netflix is widely considered the winner of the streaming wars, it's not like they can rest on their laurels. They've got deep pockets and well-known competitors. We're talking Apple, Amazon, the Disneys of the world. These aren't companies that are going to sit idly by and allow kind of market share to continue to be pulled away from them. And they're kind of one hit series, one hit movie away from kind of regaining some of that spotlight to start pulling back market shares, start pulling back subscriptions. And that specifically is why Morningstar has rated Netflix to have a narrow moat. So something to keep in mind. This is not just a foregone conclusion that they'll always be at the top of the game. Now let's take a bit of a step back. Let's discuss kind of subscriber base. Admittedly, it's growing worldwide. But one of the things I wanted to kind of focus in on was it's very in developed countries. Netflix is a very mature product. We're talking like U.S., Canada, Great Britain, things like that, with high levels of penetration. So growing subscriber bases in those markets could be a challenge going forward. And what it sounds like to me, if they're going to continue to grow in their business, is from a revenue growth perspective, this is going to be price increases. Price increases are something that is, actually been probably a success story, and you'll probably speak to it in a little bit. But how much are consumers willing to bear, especially as we kind of retreat back towards potential recessions and economic uncertainty, when we're choosing between, what's nice to have on the TV, what's nice to have in the fridge. And then lastly here, before we jump to the charts, my antenna's kind of up on this one because Netflix has always been a bit of a black box when we're talking about like viewership data, but they're actually kind of pulling back on what they're going to be reporting in terms of subscriber data, as well as their profitability numbers per subscriber. They say that's not a valid, data point any longer. But when we think if revenues don't continue to grow at exponentials that investors are looking at, a little more transparency will likely be.
30 seconds for those charts.
All right, let's jump in. Let's take a look at the chart. We can see I've got a 3-year chart. Clearly a bull trend up over a long period of time. But looking in at kind of much more recent timing here, we can see that we're noticing that there's been more of a consolidation channel that's been produced. One thing that's kind of jumping out to me, I know we're always kind of what's going to come out in earnings, what's going to say, is that we've got a potential double top that's been then forming. That if we can hold that 995 resistance, we've been climbing ever so closely toward it today with the big gap up. But there's an opportunity to bounce off after those earnings aren't as joyous as thoughts. But there's also some additional bearish signals that I'm seeing here as well. 3 bearish crosses over the last number of weeks that highlight for us. There is some uncertainty in the investor landscape.
Okay, we've heard the debates. You were both polite. Let each side make their case. Now this is the counter. You don't need to be as polite, but Kieran, politely, we'll start off with you, and then
thank you.
Just go for it.
All right, so I'm going to speak directly to Jay's point about the ad tier business and the price increases. So this is part of Netflix's core strategy. Is they want a big foray into ad. They released a press release today saying that they really want to get up to about $9 billion in ad revenue by 2030. They're currently targeting $3.2 billion this year alone. That's a 3x number. And when you think about the markets and geographies that they already sit in, yes, the UCAN is what they dub it, United States and Canada. Maybe the slowest growing in terms of growth, but if you look at it on an average revenue per membership, it is the highest out of all the geographies that it has. But it's also capitalizing on its key geography region, which is the APAC region, Asia Pacific region, which is its fastest growing geography. It's 27% quarter over quarter, currently sitting at 57.5 million. And you're right, they're getting rid of the subscriber growth numbers because they're focusing on metrics like average viewer time. We talked about them being having a moat, I would say, because they have 2 hours average viewer duration. That's more than any competitor they have in the closest span. And also the average revenue per member right now, which sits at $17.7, is miles apart from any competitor as well.
So let's talk about a cost suck. You've talked about monetizing, ads and subscriptions and things like that, but you mentioned games. What is the key word that you said when you were talking about games? Free, right?
Free games.
Netflix spent $1 billion in 2023 and is rumored that there's another $1 billion on the line in 2024 with no monetization in sight in terms of their gaming. So this is a big missed opportunity. It's something that insiders have continued to talk about. And then bringing back to that, yes, they may have their own studio, but they continue to need to refresh and buy new content. As you said, it's an $18 billion expenditure. And their CEO, Spencer Newman, has come out and said they're not anywhere near their ceiling for 2025. That concerns me when we're thinking about debt to equity from an overall perspective. We've got Netflix at over 72%. That's well in excess of Disney and Amazon, who, the highest Amazon's at 54%. So their reliance on, that debt and, financing concerns is something that I see creeping in if this continues to grow from a spending perspective.
But what you fail to realize is that even with the amounts that they're spending, if you look at their operating margins, they're expanding the operating margin. So even if they're using debt, what it tells me is their cost efficiencies are at the forefront. They're able to control their costs despite even doing the spend and increase their pricing comparatively. Now, I'll talk about one thing. They're going into an ad business, and I just wanted to compare YouTube because they're on projection to beat YouTube's overall revenue, which is a behemoth. So right now, they're forecasted to generate 46.2 billion this year. Most of that's fuel from subscriptions, 3.2 billion from advertising. YouTube currently sits at around 45.6 billion, but they generate 36 billion from advertising. So the potential for Netflix to garner advertising revenue and get it up there is going to far exceed it, and they can absorb some of those costs that you talked about games.
Got 5 seconds, Jay, to get the
it's
last
all
word.
encompassing in there.
They are making money off ads, but their premium with the no ads is much, much higher price than their competitors. It seems to me that's a concern for losing some of those subscribers.
Ad tier is where the money's at, Jay.
There we go. All right. So we've had a robust discussion about Netflix from both sides. Now you're going to get some time to explain possible options trades. You kick things off for us here and with the bull side. So possible option strategies for the bull.
Yeah, so leading up to earnings, one thing to understand with Netflix, it is a very volatile stock. Like it will, it's obviously, it gaps up quite significantly. You're looking anywhere between an 8 to 14% implied move leading up to the earnings and once they crack. So in this trade, because I'm looking at the charts here, I've just measured out kind of where I looked at my resistance levels. So what we're targeting is a strategy known as a long call butterfly strategy. So essentially, it's going to be 3 components to the options trade over here. So we're looking to buy the $950 strike. I've marked it over here. It's obviously well blown past that today with it being gapped up. And then selling the $1,000 strike, and then also buying the $950 to cap it off there. And the reason why I want to do this strategy versus a plain old debit spread is because we want to reduce the cost. It's volatile right now, which means options are expensive. So this is just another way to control our costs. So going into our options chain over here, I've already got it queued up over here. Prices are probably thrown out of whack. But here's it's thrown into place. So 950, 1,000, and 1,050. Right now, with it sort of flipping and flopping between its price, target price entry is going to be $12 as a premium. So that means if we're spending $12, that puts our break even at $962 for Netflix to push at. It's a quick trade. It's a Friday expiry here, so we're looking for a move. So it's either going to be a coin toss on this one. If it moves, and it goes our way, we'll be in the money. If it doesn't,
if it doesn't go your way, what happens?
So if it doesn't go our way, we're willing to lose the $12 premium we're paying. That translates to $1,200, of course. That means if Netflix, somehow the market doesn't like what they're saying and breaks and stays below 950, that's the trade would be bust. On the top side, if it does push above our short strike, which is at $1,000, the difference between the spread, which is a $50 spread minus the premium we collected, $12. In this case, it's going to be $38, which we would look to profit on. $3,800 on a single contract is what we're looking at there.
Very interesting play. From the bull side, how could you possibly play it?
We're from the bear side.
Bear side, you're the bear.
I'm the bear. That's me.
That'd be unfair. I make you both do bulls.
I was not convincing, Greg.
Jay throws his arms up and just walks in. It's like, come on, it's rigged.
Well, I'm glad Hiran went first because it gave me a chance to go look at the quotes because Netflix is certainly popping this morning on some news with some revenues and out to 2030. So it gives me an opportunity to make sure my strike prices are still where I want them to be. But I've got on my chart as well, I've identified some resistance support lines, and the company's certainly blown through the 940 level, but 995 is then kind of the next key level that's in place. But when we're thinking about earnings coming up and the potential for further gaps up if they like what we hear, it's something we have an opportunity maybe to go out even a little bit further from a strike price perspective. But then on that, when I'm thinking about the strategy that I was considering doing is I want to sell, like it's oftentimes selling premium into earnings can be an opportunity for us to not only take advantage of volatility crushes if we can get outside of the earnings announcements, but also with this trade that I've got proposed, a credit call spread being on short term, there's going to be much more significant decay on my short leg versus my long leg. So I originally had this around the $1,000 strike with selling and with selling the 1,000 and buying the 1010. But with the gap up today, I wanted to move this out. Looking at the expected move that's priced into the stock here, if we could add the at the money straddle, that's about $60 in terms of from 980. So meaning that anywhere plus or minus out to 920 all the way up to 1040. So looking then at my strike price on the short side, 1015, that's inside of that probability zone. But it does, if I look over the deltas that I've got on my chart, that's still 30 deltas, so it's still a probability of expiring worthless at as much as 70%. So I know the odds are still in my favor. In this particular case, I'm getting a little bit over $3 if I can get it at the mid, meaning that that's my max gain. I know the next question coming from you is what's my risk going to be this? Well, that's why I'm going and buying that 1025 further out of the money to define my risk. Max loss is going to be $10 on the trade or $1,000 per contract, less than $300 that I took in. So I've risking 700 to make 300 in this particular case.
Okay, interesting stuff. Thanks for that, gentlemen. Thank you. Bull and the bear cases for Netflix. Just a reminder to our viewers, the debate was for educational purposes, does not reflect our personal opinions about the stock. And before we move on, Jason, you're going to elaborate on margin balances.
Yeah, absolutely. So with all of the volatility that's out there in the market, I wanted to really make sure that we could show the viewers how in active trader that we could stay on top of not only the margin and your buying power in your account, but also how each individual trade is going to be impacted and how you can track your positions in your account. So let's jump back in to the platform. We can take a look. Up at the top of the screen, you'll notice it's all started out. These are where in my demo account where my balances are. If we go ahead and give this a click to expand it. Oh, it's not expanding for me. Why are we not expanding? Either way, if we give this a click, we can expand it. Hiran, is yours expanding for you?
Yeah.
Maybe we can go over to Hiran's screen. We can share up of him.
Troubleshooting.
That's some good teamwork. So Hiran went and clicked on the balances, and he unclicked the privacy button at the bottom. What's happened there is that's been able to then expand it. So you've got the opportunity to make it private if you're on the subway, in the office. You don't want a nosy neighbor looking over your shoulder. But here up on the screen, what I want to highlight for everybody is here, and you can bring your mouse up to the buying power figure. This buying power figure, that is going to show you how much available non-marginal buying power or options buying power that you've got in your account. The higher that is, the more available funds you've got to spend. As that number is depreciating back towards zero, you know that your account is sustaining losses. If it does go negative, that means you're going to be putting yourself into a potential margin call, which could require action to be taken immediately. All right, so that's good. Appreciate you showing that to me here. And let's jump back to my screen so I can start sharing on a particular trade. So we did, I've already got a bear call spread in in the trade. I'm going to go ahead and show everyone where they can find the buying power on your trade. I'm going to put in a short put. Just going to pick a strike at random. If I go ahead and sell these 970s, if I go ahead and confirm and send, on the order confirmation screen, two important measures that we can take a look in the bottom left of our confirmation is one is going to be the expected buying power effect. So this is how much buying power I need to have in my account to do the trade. And I'm also getting what's the resulting buying power. So after the trade's been done, how much excess equity do I have left in my account for other purchases or to sustain any market losses that are going on? All right, so let's go ahead and get that sent through. Next thing we're going to jump into is looking over at our positions. So we'll quickly wrap this up. We're noticing here Netflix is on my positions at the bottom of the screen. We've got the put as well as a spread that I put on earlier. If we go a little bit over to the right-hand side, there is the buying power effect. I'm going to go ahead and give that a right click, and there's an explain margin functionality. Once this loads, what's going to happen is that it shows how your buying power is broken down for each of your positions. We can see that the spread, this is a credit spread with a $10 wide width, $1,000. That's max loss in the trade. It's going to be held. That's a fixed number. But I want to highlight for everybody for the short put that I have in the account. That's what the current buying power is being held on it. As this, if Netflix goes towards my put strike price, so it gets further and so closer and closer to being in the money, that buying power requirement is going to increase. So you're going to need to make sure you've got the equity to cover that. So you're being kept informed well by this extra feature here to really show you all of the buying power that's required and available in the account.
All right, great explanation of margin, how to keep track of it on the platform, and some beautiful teamwork there. I think that was one of the most touching moments of the show so far.
Thank you.
That's special. I'll take a moment to see how special that was. If there's a stock you at home want to see our debaters go head-to-head on, send your suggestion to td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. If you scroll down, you're going to find a tab that says Join a Live Masterclass this Wednesday, 2 p.m. The team is hosting an interactive session about TD Active Trader. It's going to explore all the main features of the platform. Registration is required and is open now. The TD Ultimate Investor Contest is officially live. Canadians can enter today for a chance to win a black iPhone 16 with 128 gigabytes of storage, a check for $500, a book kit featuring 5 educational books on investing, and a 1-hour private Q&A educational session with a TD Direct Investing Education Manager. To enter, visit the TD Direct Investing Facebook page, follow TD Direct Investing, and like the TD Direct Investing contest post dated March 24, 2025. You can also gain a second entry by following TD Direct Investing on Instagram and liking the TD Direct Investing contest post dated March 24, 2025 there as well. There's a limit of 1 entry per entrant per social platform. The contest runs until April 22nd, 2025. Scan the QR code for full contest rules and details. Another great show is coming to an end, sadly. Before we wrap, though, the focus on the rest of the week. What do you got your eyes on here?
Yeah, so just from the macro point, it's a shortened week, of course, with the Easter holiday coming up, but retail sales are coming out tomorrow. It's obviously a very closely watched indicator for consumer spending. We know this is just a measure of total receipts of both food, retail, and food stores. Consensus is coming at 1.4% increase from the previous month, and February was pretty light. So this is the numbers for March that are going to come in. So we'll see how that shakes out. But also probably squarely going to be on the focus is Fed Chair Powell is scheduled to speak tomorrow. And, you know, it'll be important
our thunder. We got a Bank of Canada rate decision tomorrow, too.
We do.
I see the way they play.
They got a big one coming. So obviously the market's going to be keen to hear what are they going to do around this tariffs. Are they going to be supporting? You know, they already, you know, some different, bankers have already come out and said, part of the committee of the Fed that they're willing to support it. Right now, Fed futures have priced in 83 basis points cuts through to the end of 2026. That's up from what it was, 50 basis points here. So the summary of economic projections will be closely scrutinized again for those dovish signals if we see them. But also on the look ahead, we've got ASML as well. This is another semiconductor company that's going to be reporting earnings. It's a Dutch artificial intelligence company that produces equipment used to make semiconductors. So it's the only company that makes the state-of-the-art, what they call is extreme ultraviolet or EUV lithography systems. And they maintain pretty much a near monopoly on this. These are essential for producing advanced chips which are 3 nanometers and smaller. And essentially what the system does is it just it's like it etches patterns onto these photosensitive silicon wafers, and silicon wafers we know is the kind of the core or the bedrock of creating these chips. Now, interestingly, I looked at the pricing on this to see how much of a monopoly they have. One of these systems that they built out, these equipments, it's called the TwinScan EXE5000 system. It costs $380 million for one of those, and it weighs over 300,000 pounds, so it's no small machine, of course. They sold 44 in 2024. 38% of their revenue is accounted by this machine, and they boast customers like TSMC, Samsung, and Intel, who are all the foundries that are using this there. So coming into this earnings, you can see they've just been on a bearish trend overall. Like they're just now, and they're kind of bounced off of this monthly bullish trend support down over here. But what they need to break is this daily bearish trend over here in yellow, which I've marked over here. If they can push through that, we do have overhead resistance in that 710 to 720 zone there, but it is still below the moving averages there. So if it does push through and we see some big numbers they're posting up, it could hit that 860 mark. It hasn't moved last few quarters. It did have a seismic move in October. In that report, almost like moved about 12% here. So that'll be interesting to see what they say, because they're really going to inform how the semiconductors like space is shaping up, and its growth is projected, especially with a lot of new manufacturing now moving to the US and seeing where that's scaling up, with a lot of CapEx numbers being thrown out there right now. So be keeping a close eye on ASML there.
Company right at the center of all this drama. What are you taking a look at, Jay?
First off, whoever's in charge of the naming of the products for that company is doing a great job. Those are excellent. All right, I'm going to take actually a look at American Express. So American Express, they've got earnings coming up this Thursday. Let me see, before the bell, so Thursday morning, bright and early. This interesting fact that I was able to find, that they are actually doing a great job of attracting younger clients. They're attracting Gen Z clients kind of en masse. Kind of one of the interesting things, like almost like a customer for life philosophy. They're able to get folks when they're young and hold on to them for life. And one of the ways that they've been able to do that is through what industry analysts are saying, that they're focusing on lifestyle, and they've got exclusive rewards and benefits. That's doing a nice job. And through their focus on younger clients, has allowed American Express actually to outgrow their competitors in terms of larger loan growth, as well as higher annual compound interest income growth. So they're doing a nice job there. But some of the other larger factors that might be at play is
how you feel about putting cash on the plastic these days?
That's right. We've got the bigger economic factors that are out there, and the will they, won't they, from a tariff perspective, we just don't know. And then second of all, the one thing that kind of really caught my eye is that they have lower acceptance rates in terms of merchants. So you might not have the same ability to go purchase where you'd like to. But quickly to the chart. So there's a very similar kind of chart pattern we've seen with many companies, the ebbs and flows from November till now. But they did find support kind of around that $230 level. But if we look into a much closer time frame, you can see that it's formed kind of a wedge pattern heading into earnings. So we're looking to see if it can break out of the top side or the bottom side of that, to see if we can find and identify a direction kind of going forward. So interesting news coming out on Thursday for them.
And I'm going to add the Powell thing to my calendar, because I didn't know he was speaking tomorrow afternoon in Chicago. So he's giving us some breathing room. Bank of Canada comes out with a rate decision. We'll hear from our people. He gives us some time, and then we'll hear from Powell in the afternoon. But of course, international markets care about Powell.
That's right.
I'll be more than
It's the big fish. Yeah.
Another great show again, gentlemen. Thanks so much for that. We'll be getting together again next week.
Well, sure.
Got it.
That's all the time we got for the show today. As always, investors should perform their own due diligence before trading. Thanks for watching.